Hey everyone, welcome back to the channel. Today we are going to discuss a recent SEBI report on the future and option traders during the period FY22 to FY24. The report by Securities and Exchange Board of India on retail traders in equity derivatives or future and options reveals a troubling trend. For 93% of retail investors incurred significant losses averaging Rs 2 lakh per trader over the past 3 years. This sharp rise in loss-making traders, 91.1% in FY24 compared to 89% in FY22, underlines the risks involved in future and options trading, a segment with daily turnover exceeding 500 trillion rupees. Let's dive deep into the report released by SEBI. The number of retail traders or individual traders in future and option segment almost doubled from 51 lakhs in FY22 to 96 lakhs in FY24. This source suggests growing interest in future and option trading among individuals despite the associated high risks. This increasing participation could be driven by various factors such as allure of high potential returns, easier access to trading platforms, and the rising popularity of speculative trading. The report shows stark contrasts in profitability between different categories of traders. Proprietary traders and foreign portfolio investors or FPIs earned the highest gross profits in FY24, amounting up to 33,000 crore rupees and 28,000 crore rupees respectively. The domestic institutional investors earn modestly with around 200 crore in gross profits. In contrast, the individual traders suffered a staggering gross loss of 41,500 crores, with the other category like corporates, trusts, NRIs and PMS clients incurring a gross loss of around 19,700 crores. These numbers underscore the uneven playing field in future and option market, where the retail investors consistently lose while institutional players benefit from their experience, resources and advanced trading strategies. Algo trading is a key factor contributing to the profitability of institutional traders. 97% of FPI's profits and 96% of proprietary traders' profits were derived from algorithmic trading. A vast majority of FPIs, that is 306 out of 376 and 347 out of 626 proprietary traders, relied on algorithms. Only 13% of individual traders used algorithmic trading, and even this number is likely inflated due to the inclusion of forced liquidation action by brokers. This significant reliance on algo trading by institutional players offers them a competitive edge, allowing them to react faster to market changes and exploit arbitrage opportunities. Retail traders who lack access to such sophisticated tools are left at a disadvantage. The proportion of individuals incurring net losses in future and option segment remains alarmingly high. It was 90.2% in FY22, 91.5% in FY23 and 91.1% in FY24. Over the 3 years between FY22 and FY24, 92.8% of all individual F&O traders lost money, highlighting the persistent struggle of retail investors in turning a profit from derivative trading. This trend indicates despite rising participation, the majority of retail traders fail to succeed in future and option market, often due to inadequate knowledge, experience and risk management practices. On average, individual traders spend 26,000 rupees per person on transaction costs in FY24, further exacerbating their losses. These costs can accumulate significantly, making it even harder for the retail investors to achieve profitability, especially in a volatile and leveraged market like future and options. The income distribution of future and option traders shows that a large portion of participants come from lower income groups. 76% of individual future and option traders declare annual income of less than 5 lakh rupees and 94% declare incomes of less than 10 lakh rupees. This raises concerns about whether individuals with relatively lower incomes are overexposing themselves to risk by trading in high leverage derivatives market. The losses incurred could have a more severe financial impact on these traders compared to wealthier investors. The report points to a growing imbalance in future and option segment where retail traders are consistently on the losing side. Given the consistent rise in participation and the high proportion of loss makers, SEBI is likely to focus on new regulatory measures aimed at curbing excessive speculation and protecting retail investors. SEBI has already proposed 7 key measures to address these issues, which may include tightening eligibility criteria for retail participation, enhancing margin requirements, and improving transparency and investor education. The SEBI report paints a grim picture of retail participation in future and option trading. The growing number of individual traders combined with high loss rates and significant transaction costs highlights the need for regulatory intervention to protect retail investors from excessive risks. While institutional players thrive with the use of advanced tools like algorithmic trading, retail investors are left vulnerable, often engaging in a market they may not fully understand. If you found this video helpful, don't forget to like, share and subscribe our channel for more such informative videos. Goodbye and see you in the next one.